Today we have a very relevant topic. It's with regards to premium relief that the different insurance companies are offering the clients over this COVID-19 period. We're going to be unpacking PPS, Old Mutual, Discovery, Sanlam, and Momentum. My name is Clifford. I've been a financial planner for the last 11 years. I've worked closely with Discovery. I've worked with Old Mutual. When I started in 2009, I started working with Old Mutual. Both phenomenal companies, Discovery and Old Mutual. My love for the industry grew over the last 11 years based on my opinion that I feel that it's the most noble industry one could work in terms of assisting people in difficult times. Guys, we actually running a competition. You stand a chance to win 1,000 Rand. All you need to do is like the video, subscribe to our channel, OFA. We're going to bring you updated information with regards to the financial industry. So I think you would find this channel adding a lot of value to you. So if you could subscribe, like, and comment, you stand a chance to win 1,000 Rand. We'll announce a lucky winner in 3 weeks' time. The person with the most likes on the comment on this video would win the 1,000 Rand. So let's get into the different options that the companies have to offer you. So guys, let's start with the first company, which is Discovery, and this would be relevant to all small and medium businesses. So these are for employers. So to assist small and medium enterprises, Discovery Health Medical Scheme offers qualifying employees a concession to defer up to 2 months medical scheme contributions for the employees. These contributions would need to be repaid over a period of 12 months after the deferment period. No interest will be charged on the contributions deferred. The concessions will be effective immediately. So just to unpack that quickly, and what that means is that the employers can suspend the payments for medical aid for the employees for up to 2 months and repay those missed premiums for a period of 12 months. So I think it's quite a good initiative by Discovery, and it will definitely assist small businesses and medium businesses. And I'm cognizant of the fact that obviously that these are people that are also hit the hardest during this COVID-19 period. So remember, there's T's and C's to all of these. Please speak to your financial advisor, or you're most welcome to get in touch with our office. Our details will be left in our description below. So that's quite straightforward. Let's get into individuals as well, and how it can assist individuals with regards to premium relief on their medical aid. So Discovery is allowing members to access the MSA, so the medical savings account balances from 2019 to pay for the medical aid in 2020. So let's read what Discovery says. So Discovery Health Medical Scheme allows individual members with sufficient medical savings account balance to utilize a positive balance to pay the total medical scheme contribution for up to 3 months. This option is available to members who pay their contributions directly to the scheme, as well as members whose employers pay contribution on their behalf. A positive medical savings account balance refers to cash balance and does not include the upfront balance allocated to the member at the start of each calendar year. So what does that mean? Hypothetically speaking, so first of all, you got to have a medical aid that is a saving plan. So you have a MSA account, and if you've had 3,000 Rand that was in your MSA account in 2019, and your premiums every month for your medical aid is 3,000, you could use that MSA, that positive MSA account from 2019 to fund your medical aid contribution for a month. So it just depends how much money you carried over from 2019 to 2020 from your MSA account. Remember, no savings from 2020 will be applicable to this relief option for you as a client. So if you want more information, please get in touch with Discovery, or you're most welcome to contact our office. Let's get into the life side. And if you have a life cover with Discovery, and what options do they have? So, Discovery says under the premium relief option, qualifying policyholders approved by Discovery Life will be able to draw down from the accumulated health and vitality integrated payback fund for a period of 3 months worth of the Discovery Life premiums. So what this means, guys, is that if you've accumulated a payback fund with Discovery, sometimes certain policyholders paybacks vest after 5 years, some vest every year. Every individual is different. So they're allowing you to access those funds immediately to pay for your life cover for the next 3 months. There is a penalty charge or a fee charge to this. So let's say, hypothetically speaking, you borrowed 10,000 Rand from your payback fund. Discovery will charge you 2% per month on the 10,000 Rand until you decide to pay it back to Discovery. So that's the first option. The second option, guys, is restructure benefit amounts and premiums. Then they will have the ability to service the cover back up to original levels again without any medical underwriting after 3 months. So basically what they're saying is that you are welcome to service your life policy down in this COVID period, and after 3 months you're allowed to service it back up to its original levels. There's T's and C's that apply to these benefits. So for example, if you have 10 million Rand life cover, you're welcome to service it down to 1 million Rand, which will obviously bring your premium down as well for the next 3 months. And you can service it back up after 3 months, back to the 10 million without any medical underwriting. But there's T's and C's that apply. And you're welcome to do that with all your benefits, with your living benefits as well, such as your life cover and dreaded disease. But if you choose to cancel any of your living benefits, when you reinstate your policy, they would make you go underwriting requirements. So most probably you want to service all your benefits down to the bare minimum based on your affordability. So when it's time to service your cover back up, you don't need to go for medical underwriting. But please, guys, speak to your financial advisor with regards to these options. And the other option is you could suspend your cover for 3 months. You will have no cover for 3 months. And then you could the Discovery will automatically reinstate your cover after month 3. So you pay on month 4. And then you would have your full cover back in place without any underwriting. But remember, you won't have cover for the next 3 months. So that's Discovery, and I must make mention of the fact that Adrian Gore and the CEOs of Discovery has joined in with Cyril Ramaphosa in terms of contributing to the Solidarity Fund. They're contributing 1/3 of their salaries, which I think it's a brilliant thing to do, and well done to Discovery. So next company we're going to unpack is PPS, which is designed for professionals such as our doctors, attorneys, engineers, guys that have a degree. So they basically qualify for PPS. So PPS says you could use your profit share account to fund your PPS life cover. But obviously you've got to have enough funds that have been built up in your profit share account to pay for your PPS policy. So this is what PPS says. After 2 months of non-payments of premiums, members can choose to use their profit share account to pay for their premiums. Okay, members can use this option if they have accumulated sufficient funds in their profit share account. These members can make use of their option to pay their premiums as long as they need to, as long as they have sufficient funds are available. These premiums also never need to be repaid. Self-explanatory. So use your profit share to fund it, and you don't need to pay those premiums back to PPS. T's and C's apply as well. Second option with PPS that they're offering clients is that temporary cessation of paying premiums. It's TCPP, which means you can put your premiums on hold for up to 12 months. Obviously, you won't have cover within a 12-month period. There are certain covers that one would still have, but I think it's important that you discuss this with your broker or financial planner, or if you'd like for us to send you more information on this, you're most welcome to contact our office. So that's it from PPS. Let's move on to the next company. So Old Mutual, what do they have to offer clients? They've been around for 175 years. So you can reduce cover. If you decrease cover, you will have the opportunity to increase it back to the original amounts within 3 months, okay, without any declaration of health. So you could service your cover down from 10 million, for example, down to 500,000, and after 3 months service it back up with no medical underwriting. So that's basically what they're saying, but there's T's and C's that apply to that benefit. Take a premium break. So you can take a premium break for up to 3 months with Old Mutual. So the first month of your premium break, full claim amount in the first month. Thereafter, Old Mutual will pay up to 25% of your claim amount. So if you cover for 10 million, if you die in the first month, they'll pay you 10 million. If you die in the second month, they will pay up to 25% of the cover amount, which is 2.5 million with a maximum of 3 million. So they'll pay 25% of the 10 million for the next 2 months. So if you're planning on dying and you're Old Mutual client, try and die in the first month. I'm just kidding. Okay, the third option is with Old Mutual, is to revive your policy. So they'll give you up to 6 months of not paying for your policy, but there is terms and conditions with regards to whether you'll be covered or not. Please speak to your financial advisor about these benefits that Old Mutual is offering you. Remember, this is all advice-based products, so it's important to understand what this impact would be on your financial portfolio should you choose to exercise any of these relief options as a client. So that's Old Mutual. Let's move on to the next company. So let's talk about Momentum in terms of their relief options that they're offering a client. They're calling it PPO, Premium Pause Option, Momentum. So Myriad offers clients a premium pause option, temporarily pausing clients' life insurance premiums and life insurance cover for 3 consecutive months while maintaining guaranteed insurability until their premiums automatically resume. Pausing premiums will normally result in a life insurance cover being forfeited for the period that the premiums are paused. However, if the clients proactively apply for PPO between 1st of April and the 30th of June 2020, they will get free ex gratia cover equal to 20% of their paused life cover benefit during the premium pause period. The ex gratia cover will apply for the duration of the premium pause period at no cost to the policyholder, funded by Momentum. Basically what they're saying is that if you've got 10 million cover, you can pause your cover for 3 months and Momentum will still provide you 20% of cover. So if you pass away, unfortunately, they will pay 2 million of that 10 million cover, 20%. Doesn't cover living benefits such as rare disease and disability or income protection. Important to note. Please speak to your financial advisor, and we're also here to assist. If you need more information, please contact our office. That's Momentum. Let's move on to the next company. So guys, let's talk about Sanlam. It's the last company that we're going to cover today. So they have cover flexibility options. Okay. To use a scenario, for a client who has reduced cover on a benefit, for instance, 40% of the previous level, this underwriting offer will make it possible to increase the cover back up to a maximum of 80% at its previous level without new medical underwriting. So what does this mean? It means if you've got 10 million cover and you service your cover down to 40% of the 10 million, you will now have 4 million cover over this COVID-19 period. And after the 3-month period, you want to increase it back to 10 million. You can't. You will have to increase it back to 8 million. Okay. And if you want to take it back to 10 million, you'll need to do medical tests for the remainder of the 2 million. Okay. So that's one option with Sanlam. The second option is offering you a premium holiday option. Okay. So this is what Sanlam says. The period of grace will still provide the client with full cover for a period of 1 month after the premium was not paid. The premium holiday will always be for a period of 3 months, after which the cover will automatically be reinstated on receipt of the first premium. So on receipt of the first premium, they will reinstate your cover, and basically after your first month premium that you missed, you will still have full cover for the first month. Thereafter, T's and C's apply. But as I say, please speak to your financial advisor or get in touch with our office. So guys, we regard it as essential services where we're assisting clients with premium relief options from OFA, assisting clients with their medical aid claims, assisting clients with their short-term claims. So please, if you need help with any of those that we just mentioned, get in touch with our office. Guys, thank you for taking your time out to watch this video. I hope it added some value to you. Please remember, we're running a competition, so you can win 1,000 Rand. All you need to do is like, subscribe, and comment. If your comment gets the most likes on this video, you would win 1,000 Rand. We'll announce the lucky winner in 3 weeks' time. Hopefully, South Africa is a different place in 3 weeks' time, and we're all back to work in 3 weeks' time. Guys, stay blessed, and most importantly, stay safe. Take care.